Welcome. I'm back again for the CleanSpark and Bitcoin Friday update. We're going to take a look at the daily chart, the weekly chart, and then we're going to take a look at some short and long dated option interest. We'll talk a little bit about short-term price targets. Am I going to be adding, trimming? What's my stance on that? And we might take a quick look at the general market overview after, just to wrap things up nicely. Jumping straight into CleanSpark daily chart here. CleanSpark has been so good to me. It's fallen back down perfectly. I didn't think it'd ever get back this low, but I'm endlessly grateful that it has. It's allowed me to accumulate back into a 10% weighting. I was trimming out. I've trimmed out here, added back, trimmed out, blah, 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 and the cycle continues. I didn't think I would still be trading in and out this one at this time in the cycle, but there you are. So this doesn't mean, though, on the next rally, I'm probably going to be sliding overweight on this one. So I'll have to trim a smidge. So the levels I'm looking at for a trim would be if we break out of this trend. It's not this measured move isn't going to quite get us to this peak volume, but that's where I'm going to probably trim out 1% or 2% of my position, take some of that risk off that I've added back on. And then above that, this $20.69 kind of range, the previous high resistance there, that's going to be another couple of percentage trim for me. After that, though, I think I'm probably going to just hold my bags right up into this $28.50 take profit on the golden Fibonacci level. That's my plan on that one. But other than that, we've got this active pattern here. It looks more bullish than bearish. It looks like it wants to go upwards, but a break of this one gets us down to this $770 range. Honestly, I would love for it to get this low. That would be a further 26% drop. I don't think it's going to do that. I think that's crazy, but September is a very negative month usually. So if it's going to happen, I'm going to be loading my bags with that because I love it. The upside moves, though, that I'm targeting on this one from here would be a 50% return roughly, and then an 87%-ish return, and then 159%-ish return. So bear in mind I've already done a few 100% return on this already. That's pretty good. RSI here is pretty cold, so if it wants to pop, it's got tons of room to do so. The MACDX Plus, the negative moving average, is dominant here, so the death cross is very active. Institutions have been sliding out on here. I do want to point out that this isn't the same as actual institutions owning the stock. I'll talk about it later on in this video when I talk about the news, because there's only one thing I want to show you on that. But this is more just to do with locked in shares and stuff like that. It's weird. It's just what they're called. Probably should just do a separate video on that just to explain things, but finding the time is proving to be a bit of a challenge here. But for the most part, retail's still looking dominant on this one. We did have the golden bar here, so hopefully we can pop a couple more of those and look super bullish. I mentioned in my video yesterday, well, I posted it today, that 3 golden bars are often really bullish signals, and here's an example of that. 3 bars very close together, boom, boom, boom. Absolute volcanic move happened after that. 278% return. So definitely keep an eye out for those golden bars. They're not super accurate, and I'd use them in conjunction with the other stuff, but I like them and they're a good indicator when you use it with other stuff as well. What else did I want to talk about? That's it. Let's take a look at the weekly. Okay, the weekly doesn't look as bullish as the daily does. This pattern here, it's taken 1 week to undo 3 weeks worth of price progress, so that's not ideal, but it's a bit early to panic yet. I'd only panic really if we break below this red trend line here. I say panic, I'd probably be quite excited, like I mentioned a minute ago in the video. I think a lot of newer investors and traders make the mistake that when their stocks start to pull back, they sell thinking it's the end of the world. If your thesis is still intact, that is a buy the dip opportunity. There's only a couple of reasons really why you would want to sell out of a position. predominantly all of those causes would mean your thesis is broken. So management have screwed the pooch kind of thing, legal issues, price has become a bit rich, those kind of things. But for the most part, these pullbacks are going to be buy the dip opportunities if you've got strong conviction in your own thesis. And that's the important part as well. It has to be your own thesis. Don't just copy other people's. Come up with your own plan, your own kind of price targets and whatnot. But other than that, the RSI looking a bit cool here. So it's definitely got room to run if it wants to still. The golden cross is coming together, so we will need some positive action if we want to keep this from becoming a death cross, which would be more bearish. I'm happy to have more downside, but ideally I don't want to see another death cross again. That would be a bit too negative. I wouldn't like that. And flow quite negative here, so we at least want to see a blue bar, and then transition to green at some point soon. The open options interest for CleanSpark, very small potential move for the rest of the week, but I mean there's only one day, so that's not surprising really. But the resistance here is $13. Normally the resistance would be bang on this gap fill, which is a little bit higher, but traders and investors tend to stick to whole numbers, so it totally makes sense why it's at $13 as well. It does line up with this historical top, which would also be resistance. So let's push it out a week. Again, the same kind of resistance, and then another week, similar kind of resistance. So the market's generally going to be quite sticky. Sorry, the price is going to be quite sticky around $13. So I do expect it to push back up to that level at some point. That said, that's quite a decent move anyway by itself. So I'm glad I'm adding not much support to the downside though. So that could be a concern. A downside move could tumble us, but I will be buying that, so not a problem. I'll hold this up. I'm not going to look at a year out or whatnot. In fact, maybe I will. I'll take a quick look at January 2025. I'm curious. I've not looked in a while. I mean, people are just picking $5 increments on this one, so it looks like no one's really got a foggy what price is doing. But though that does mean these $5 increments are going to be very good sticking levels. This $20 range is going to be a bit of a beast, I think, when we get there. It's got a lot of historical confluence. So it's definitely an area you'd want to consider trimming, waiting for a pullback. A pullback could be pulling us to 1750 or back down to 15. So that would be a really good area to add back on that one. Not much interesting news on the CleanSpark front. A lot of the news in this video is going to probably be related to Bitcoin. That's where all the drama's happening again. So all the kind of headwinds that we thought we'd cleared, a bunch more have popped back up. So we'll talk about that a little bit after we've looked at Bitcoin's price action. But I just wanted to show that institutions really starting to load the boat on this one. What I say starting, they've been doing it pretty much all year, and they've slowed down a little bit, but not too much. I'm pretty sure all the miners are going to look like this, but if you want to look at these charts and keep up to date with them on your own, you can go to Fintel, and it's all accessible there for free. The easiest way to put it in is just put in to the search Fintel CleanSpark ownership, and it should just bring that link up for you. You can do that with any stock as well on there. Looking at the daily chart for Bitcoin, this golden Fibonacci level is holding us up yet again. The concern here is that the more you knock on a door, the more likely it is to open. And that's been 1, 2, 3, 4. And now this is about the 5th time we're tapping it. So if we do break below this, we're heading back down to this red historical support again. That's about $52,000. The worry here is that if we do break this, there's no volume here. So there's not really much demand to buy in that area. So we'll likely move very quickly down to this level, which did historically have a strong level of demand. So we should see a little bit of a bounce action back on there, but it is going to make getting back higher a little bit tougher. If that happens, then I'm thinking the Fibonacci level will be a little bit of resistance in the short term. I would need to reconvert that into support. We could be very generous and just say this is still the same kind of test that this was, and this was just a bit of a red herring, but we'll see. It'd be better if we got back above at least this red trend line in the short term, and then we can start pushing back up above the bull market band. There has been a lot of volume in this area, so people like it in this area. I think Bitcoin at this price is a bargain. My target's kind of, it hasn't really changed too much. It's really hard to pinpoint the peak because of FOMO and everything, but it's likely to fall between 140 or 120 and 240. So for me, I'm pretty much happy with my stack, although I did recently just buy a bunch of Solana, so pretty much my Bitcoin, Ethereum, and Solana stacks are all very similar. Although I'm a little bit overweight in Ethereum, I'm probably going to start getting rid of that on the next pump up. I'm falling out of it. I still have my DeFi stack. I'm not touching that. That gives me a weekly pay, but my just hodl I'll probably get rid of. But the daily indicators, RSI is kind of neutral. MACDX Plus, we did tap overbought, so it makes sense we had a little bit of correction there. Still looking good on the golden cross, and flows are kind of just neutrally flat. The weekly chart for Bitcoin looks a little bit better. We're still well within this trend here. Obviously, if we cut this right down the middle, we're still in the bullish kind of part of it, so it's not too much of a concern. That's why it's important to always zoom out, I think. Gives you a better picture of how kind of bearish and bullish things are looking. But the RSI again is neutral. Institutions still really dominant on this, and Golden Cross is still very much in play. It's coming together a little bit, but hardly alarming. And then flows kind of neutral, negative. So I think this weekend we'll see if we get a pump. We haven't we didn't last week. I can't remember if we did the week before. But there are some headwinds coming for Bitcoin now, so that as well is going to weigh on price, which isn't ideal. So for Bitcoin news, if you don't know who this man is, then you probably shouldn't be investing in crypto. This is GG, Mr. Gensler. He's at it again, and this time he's after NFTs for security law violations. He's going after OpenSea for this, but obviously if that's successful, it opens the door for a lot of other companies and tools that he can go for. Specifically, the DeFi market's probably going to take a hit from this. If anything comes from it, honestly, I don't think anything will come of this because it's a bit crazy, really. I think he's clutching at straws. He's a one-man crypto hating dingbat. There's plenty of legit issues that he could be chasing instead of this nonsense. So we'll see what happens. We'll keep a close eye on that. But for the most part, a lot of the ETF inflows have kind of stalled out. So that they're not picking up the slack. So it's relying on spot at the moment, which doesn't seem to be doing too great. So we definitely need to see some flow coming back. I'm hoping over the weekend we get a little bit of a pumpy pump we haven't had for a while. But if this continues and the flows don't come back, then it's going to be a bit of a rough ride, I'm afraid. So looking at the economic data that we had today, we had all this good stuff coming out before the market opened, and the numbers were fantastic, really. Can't really complain. The GDP growth rate, this is the second revision. If we take a look into this one. So it was 2.8% on the advanced reading, and now we've got 3%. Now it could get revised lower again, but this is pretty good. I think off the back of this, it'd be unlikely that we got a 50 bips cut. I feel like that would just be too panic-inducing. I think slow and steady would be the rate here. They don't need to cut 50 at this point. I think just test the waters, see how things go. They probably should have been cutting already. But that said, I would prefer a proactive approach to cutting, not a reactive. I don't want to see panic. I don't want to see big cuts. That would not be good, and that would definitely send things off in a spin. Other than that, what else did we get today? Initial jobless claims, they came in good, lower than expected. More jobs data, good, lower than expected. Core PCE, quarter over quarter, came in lower than the previous read. So if this trend continues, that'd be nice. Even if we just held level, that'd be good. I don't think I'm missing anything. Pending home data, rubbish, we ignore that. Auctions, boring. More Bostic. Didn't listen to Bostic. Fed balance sheet. A little bit of runoff, but not too much. So all in all, the data today was banging. I love it. The market really pumped earlier in the day, and it faded towards the afternoon. Now that could be because there's some important data out tomorrow as well. So before the market on Friday, which is tomorrow, we've got the core PCE price index month over month, the personal income and personal spending. So they're going to be quite important. The market is going to want to look at those. As well as that, though, it is the weekend, and a lot of people do just close their positions on Fridays, so we could see some selling into that. And I think in the US it's a bank holiday, so I think the market is shut on Monday. I have to check that though. I always get a bit confused with what days the market's open and when it's shut. The other day we had a bank holiday here and I thought the market was shut. I was quite surprised to see alerts coming through on my phone, but you live and you learn. What can you do? So that's it for the data, I think. If you found this content useful, feel free to like and share this video. You can also check me out on www.thecraftytrader.com, and it'd be helpful if you subscribed.